Here.
Jeffrey Kirst.
Here.
Okay, all members are present. We now open it up to public comment. Public comment is invited at this time. Do we have anyone with public comment? All right, seeing none, we can move on to the business at hand. Agenda item 2.01 is approval of the minutes for the meeting on August 25th, 2022. Does anybody have any modifications to those minutes? None? Okay, hearing none. And by the way, Mr. Kirst, I did see that you had some questions about the last actuary report. Interest and service costs. Did
Yes.
you get an answer from Jessica on those?
I did not.
Okay, I will email you answers and CC the rest of the board. They're fairly technical, as you might suspect. Okay, seeing no changes to the minutes, I'll take a motion to approve.
Fran McGregor, I move that we accept the minutes from the August 25th meeting.
Okay, do I have a second?
Jeff Kirst, I will second.
Okay, all those in favor say aye. Aye?
Aye.
Opposed? Hearing none, the motion passes unanimously. Okay, so our next agenda item is for discussion only, and that is our fourth quarter financial statements. These are unaudited at this point. It's just 2 pages for you. This is item 2.02, again for discussion only. I'll take a shot at this. The first page, I do believe, is, sorry, I'd broken up my attachments, but anyhow, our balance sheet for the trust, and that shows total assets of $75.6 million compared to $82.2 million last June 30th of 2021. And you'll hear this recurring theme throughout the meeting. The reason for that decline is our investment losses on the portfolio we have with the Retirement Benefits Investment Fund. So we did see a sizable loss after sizable gains the prior fiscal year. And then the second page there for you is our statement of changes in net position. This goes into a little bit more detail and compares our budget to actual numbers. So the first line item I would point you to is the contributions by the district to the trust. We budgeted $2 million, and these are charges we assess on every employee's payroll. The employee doesn't pay it, but there's a accompanying charge where we deduct from the general fund or the appropriate fund and then remit those monies to the trust, just under $2 million. So right at budget, we transmitted $1.96 million into the trust. The next section is, you can see, is investment income, and there again you can see under the actual column negative investment income of $7.48 million. And again, this is attributable to the portfolio we have with Nevada PERS Retirement Benefits Investment Fund. As you'll hear later, they had a negative return of 9.3% in fiscal year 22 after a really strong fiscal year 21. So what comes up sometimes comes down, and that's what happened in 22. So total additions, if you will, of minus $5.5 million for, unfortunately, for fiscal year 22. And then for benefits paid out of the trust, we'd budgeted $6.3 million, but only withdrew $1 million. And that was for the retiree life insurance implied subsidy. So we did not access the trust to the degree that we had budgeted based on, you know, kind of the status of the health insurance fund itself. So that's good. So we contributed $2 million, withdrew $1 million. So net contributions of plus $1 million. But again, unfortunately, due to investment losses, we showed overall a net decrease in our net position of $6.59 million. So we ended up the fiscal year with a total net position of $75.6 million. Any questions? Pretty straightforward, right?
Yes.
Okay. So the next item, again, is for discussion only, and that is the audited annual financial statements for the Retirement Benefits Investment Fund. And again, this is the fund that was created in law in 2007 to hold public agencies' OPEB monies, and to be able to, and therefore to be able to invest it in the stock market, basically, not just fixed income investments. So the first pages I would direct you to, but feel free to ask questions along the way, is the third page, which does not have a page number, and that is the independent auditor's report. The state uses Casey Nealon CPA firm to audit their financials, and you see there that the auditors have opined that the financial statements presented to them do present fairly in all material respects the financial position of the fund. Thus, they provided a clean, unmodified opinion, which is what you want. So on page 5 begins management discussion and analysis. This is what we all do for our financial statements. This is intended to be a layman-esque description of what happened during the fiscal year, even though it's not very layman-esque in wording. That's the way it goes when you're talking about accounting concepts. But you can see on page 5, total contributions from all agencies into the fund were $5 million, which I was kind of surprised as low as it was, because I know Washoe County, their contributions to their OPEB are $20 million a year. So I don't know why it was that low, but it was. Then on page 6, total distributions out of the fund were $5 million. So basically they netted off. So again, this is the fund that we all, well, not we all, but participating agencies send any OPEB trust money to be invested long-term in this portfolio. Again, kind of the recurring theme here is that there was a net investment loss on page 6 of $72 million. And you can see there in the next bullet point at the top of page 6, it shows a total net portfolio decrease of 9.4%. Then page 6 shows you again the net position of the entire fund. So the fund went from having $774 million in it to $701 million in it. So that's a rough year, obviously, but there you have it. And then the subsequent pages kind of break that out a little bit more. So again, on page 7, if you compare the net investment gain or loss on page 7 of the MD&A, we had, again, we had losses of $72 million, but hopefully you can see the prior year, we had gains of $166 million. So, overall, between the 2 years, obviously a net gain, but you would suspect some kind of drop after the kind of year we had in fiscal year 21, and indeed that's what happened. And part of it's related, of course, to Fed monetary policy. As they're raising interest rates, there's fears of a recession and so forth, as you all know, if you have any investments. So we were affected by that. Page 13 provides the asset allocation, again, of this fund that we've talked about before. So the fund's invested in U.S. stocks. The target allocation is 50.5%. International stocks are another 21.5%. And then U.S. bonds, those are really U.S. Treasuries only, are 28%. So that's how the fund is managed. And then page 20, just for your information, provides a listing of all participating agencies. These are agencies that have OPEB monies that choose to invest them with the RBIF. Again, you don't have to invest your OPEB monies in RBIF, but most do. And so you can see, again, total market value of $701 million, and we're on the top line on page 20, 72 million. So we are actually the third highest, we have third largest agency that participates in the OPEB trust after Washoe County and after Clark County. So when you're going through these financial statements, if you did, what you're looking for is just, any negative comments, right? It's kind of exception-based. Is there anything here that caught your eye that would be a concern? And I didn't see anything other than, of course, the negative return, but that's going to happen. I didn't see anything here that were noted that would be an alarm to us in terms of the management of the fund or any of the risks disclosed in the notes section that I didn't go over, because again, there's nothing there that would be concerning, at least to me. So with that, I'll open it up to any questions you might have.
Jeff Kirst, one question, as I was reading this earlier, there was a statement in here somewhere that this money is invested in a manner similar to PERS, but not exactly the same,
That's right.
because it said it was smaller. Could you please explain that, if that is something that you understand?
Yeah, and I'd be happy to invite PERS staff here if you'd like to talk about the fund more specifically, but I know one of the key differences between the PERS portfolio and the RBIF portfolio, well, both funds are passively managed, so they're just in index funds. So there's not an active manager who's doing, sells and buys and taking that, kind of approach. These are all of their portfolios are in index funds, but the key difference between the two portfolios is PERS got in at the very beginning of the private equity movement, if you will. So they've been invested in private equity for a long, long time. So these are privately held companies, right, that large private equity shops buy a company and take them private, go through a process, and then, do an IPO or what have you to sell it back in the public or private markets. RBIF has no exposure to private equity, and that asset class has generally had higher returns than public equity. So private equity is not an allowable asset class for RBIF, whereas it is for PERS.
Okay.
And PERS can be in other asset classes that we cannot as well. They choose not to at the moment, but so that's the slight variation in the asset allocations between the two portfolios.
Jeff Kirst, and PERS probably is not big in private equity?
It's a small allocation. Tiny. Yeah, it's 5 to 10% is my recollection. It's not huge, no.
And is that?
But it's enough to juice up the returns a little bit.
Yes, and is it the same manager who was in the Wall Street Journal for his low overhead approach, or is that a different management team that covers that?
They use a different asset manager. Again, they got kind of on the front door of private equity. I don't remember that asset manager's name. But no, it's that Wall Street Journal article really was more about internal staff who just manage the index funds and avoid the high fees of portfolio managers. I would suspect the private equity manager does make a higher fee, does take a higher fee than those index funds.
Thank you.
Any other questions? Okay, that's kind of just our standard due diligence to look at the financial statements of this portfolio since we're, almost 100% invested in it. All right, that's not an action item, so moving on. The last item is the investment performance as of September 30th for RBIF. We sent that out earlier this afternoon. Sorry, Don, I'm trying to find that. Oh, here it is. Okay. So you can, for that item, you can kind of just go to the last page if you'd like. It's the horizontal kind of color-coded table.
That's the one with comparisons to other.
It is, and we could talk about that if you'd like. I'm just zipping ahead to the last page, which gives performance as of September 30th. And unfortunately, the fiscal year to date return, so the return since July 1 through September 30th is minus 5.8%. U.S. stocks have a return of minus 4.8%. You can see foreign stocks continue to just trail domestic stocks greatly. And then even U.S. bonds showed a negative return because, again, the Fed's raising interest rates, and that causes an unrealized loss for bonds. So not a great quarter for sure, but we will see how things go as the Fed hopefully kind of moderates its tightening position going forward, and with the new Congress and so forth, we'll see where things go with the remainder of the year. So if you would like to talk about it, the other slides there in that handout, we can. Any questions? Jeff, do you have any questions?
Jeff Kirst, as I reviewed it earlier today, it appeared that our entity was doing reasonably well compared to other people.
Yes, I think that's right. You can, so on the chart that does compare PERS to RBIF, that's where the exposure to private equity helps PERS. But overall, on the prior page, yeah, we're generally doing better than other entities. Again, we don't use active managers. We just take what the market's given us, and a lot of times, it's just hard to beat the market on a consistent basis. So we're doing okay. Hopefully, like I say, things will improve later this fiscal year. Okay, seeing no other questions, that concludes agenda item 2.04. Moving on then to closing items. Our next meeting is scheduled for February 23rd. Hopefully that works for a majority of you. Again, you can always call in if you want, or go on Teams. We can make that available if that's more convenient for you. With that, I will take any public comment at the close of this meeting. Seeing none, we are adjourned. Thank you for coming in.